In this video, I will help you understand the so-called family glitch, so you can make an informed decision when choosing between employer-sponsored insurance and subsidized coverage through Covered California. Let me give you some background of this rule, and then we can look at examples. The Affordable Care Act, often called Obamacare, was a landmark law passed in 2010. Its goal was to make healthcare more accessible and affordable for Americans. One key part of the ACA was the creation of marketplaces. These online platforms allowed people to compare and buy health insurance plans. To help with affordability, the ACA offered premium tax credits. These credits helped lower the monthly cost of insurance premiums. The ACA aimed to make health coverage accessible to everyone. It introduced subsidies to make insurance more affordable. Millions gained coverage, but a significant flaw emerged: the family glitch. The family glitch refers to a quirk in the ACA that prevents some families from getting financial help with their health insurance, even if they qualify. This glitch stems from a 2013 IRS rule that defined affordability differently for individuals and families. While the rule aimed to make employer-sponsored insurance affordable, it inadvertently created a gap for families. The 2013 IRS rule focused on the affordability of employee-only coverage. If an employer's plan was deemed affordable for the employee, the entire family was considered ineligible for subsidies. This meant that even if adding family members to the plan was prohibitively expensive, they were locked out of receiving tax credits. The ACA's affordability test hinges on a percentage of an employee's household income. If the cost of the employee's self-only coverage exceeds 8.39% of their income, it's considered unaffordable. In such cases, the employee and their family can access subsidies on the marketplace. However, if the employee-only coverage is deemed affordable, the whole family is ineligible for subsidies, even if adding dependents makes the plan unaffordable. This family glitch creates a scenario where families are stuck. They can't afford the employer-sponsored family plan, but they don't qualify for subsidies. This leaves them with limited options and potentially forces them to go without coverage. This unintended consequence of the IRS rule has impacted millions of Americans. Let's meet Ricardo and Maria Contreras. Ricardo works as a delivery driver and receives health insurance through his employer. His employer-sponsored plan is considered affordable for him. However, when Ricardo tries to add Maria and their 2 children to his plan, the cost becomes too high for their budget. They consider looking for options on the marketplace. Unfortunately, due to the family glitch in the past, the Contreras family wasn't eligible for subsidies on the marketplace. This is because Ricardo's employer-sponsored plan is deemed affordable, even though adding his family makes it unaffordable. This situation leaves the Contreras family with limited choices: struggle to pay for the expensive family plan or go without coverage. The family glitch highlights the real-life consequences of this policy gap. The crux of the family glitch lies in the separate affordability tests for employee-only and family coverage. The ACA, as it stands, only considers the affordability of the employee's individual coverage when determining eligibility for subsidies. Even if adding family members to the plan pushes the cost beyond the affordability threshold, the family remains ineligible for subsidies. This approach fails to recognize the financial burden placed on families when health insurance costs escalate with the addition of dependents. The separate affordability tests create a disparity between the affordability assessment for individuals and families, putting families at a disadvantage. While understanding the rules and regulations is crucial, the real-life experiences of families navigating the health insurance landscape can provide invaluable insights. Let's explore some practical tips and hear from those who have faced the family glitch head-on. Meet the Thompson family. Sarah, a school teacher, and her husband David, a freelance graphic designer, have 2 young children. Despite Sarah's employer offering decent health insurance for her alone, the cost to include her family was prohibitive. They were caught in the family glitch, paying over 15% of their household income on health insurance. After learning about the fix to the family glitch, Sarah and David used the Covered California Affordability tool. They discovered they were eligible for significant subsidies. By switching to a plan through Covered California, they managed to cut their health insurance costs by half, while still maintaining quality coverage for their family. Here are some practical tips from families who have successfully navigated the system. Tools like the Covered California Affordability tool can help you determine eligibility for subsidies and compare different plans. Don't hesitate to reach out to a licensed insurance agent for help. They can provide personalized advice based on your specific situation. Compare the total costs of employer-sponsored plans and covered California plans, including premiums, deductibles, and out-of-pocket expenses. Health insurance regulations and subsidy thresholds can change. Keep yourself updated to take full advantage of new opportunities. Life events like job changes or income changes can affect your eligibility for subsidies. Be proactive and reassess your options regularly. Law changes also affect eligibility. On October 13, 2022, the U.S. Department of Treasury and the IRS released a game-changing rule that fixed what's known as the family glitch. For years, families were locked out of financial help for health coverage if just one family member had employer-sponsored insurance, even if it wasn't affordable for the entire family. But now, that's changed. As of December 2022, if the cost of your employer's family health plan exceeds a certain percentage of your household income, your family members can now qualify for financial assistance through Covered California. In year 2024, that threshold is 8.39%. This rule means more families will have access to affordable health coverage and the benefits they need. Let's dive into what this fix means for you. The Thompson family's journey illustrates the importance of exploring all available options and seeking expert advice. Thanks to the Family Glitch Fix, more families can now access affordable health insurance and gain peace of mind. In the description of this video, you can find useful resources and the calculator where you can easily calculate whether your insurance is affordable or not. I have also included the employer-sponsored coverage worksheet. This worksheet and the affordability tool help you check if you and your family have an offer of employer-sponsored health coverage that meets minimum value standard and is affordable. As we conclude, remember that navigating the health insurance maze may seem daunting, but with the right tools and support, you can find a path that ensures your family's well-being. Don't let the complexities deter you. Take control, explore your options, and make informed decisions for your family's future. Thank you for watching, and don't forget to like, share, and subscribe for more insights on navigating health insurance and making the best choices for your family. Until next time, stay informed and stay healthy. Disclosure: the information presented in this video applies to health insurance plans and regulations for the year 2024. Health insurance laws, rates, and coverage options may vary and are subject to change. This video is for informational purposes only and should not be considered legal or financial advice. Always consult with a licensed insurance agent or healthcare advisor to evaluate your individual circumstances and ensure compliance with current regulations. Eligibility for tax credits, subsidies, and other financial assistance through Covered California or other marketplaces depends on specific income and household factors. Coverage options, benefits, and network availability may vary by location and insurance carrier. Be sure to review your plan details and consult official resources for the most up-to-date information.